and welcome to the HIL Limited's conference call. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Neil Shah from CTR India. Thank you, and over to you, Mr. Shah.
Thank you, Michelle. Good afternoon, everyone, and welcome to the call hosted by HIL Limited's management to discuss the recent acquisition of Topline. Joining us will be Mr. Akshat Seth, Managing Director and CEO of the company, and Mr. Ajay Kapadia, Chief Financial Officer. The call will commence with remarks from Mr. Akshat Seth covering the key highlights of the acquisition, following which we will open the forum for a Q&A session. I request you to limit your questions to the development specifically. Before we begin, please note certain statements made on today's call could be forward-looking in nature, and details in this regard are available on the invite shared with you earlier. Thank you. I'd like to invite Mr. Akshat Seth to make his views.
Thank you, Meet, and thank you everyone for joining in today. I know it was at a short notice, but it's important and a happy development at our side. We thought we should break away from the cycle of those quarterly result-driven conversations and start sharing some developments which will have a bearing not just for the here and now, but for the long-term prospects of HIL and our various business segments. So thank you again for joining us. So I'm happy to share that we have signed an agreement with Crestia Polytech for the acquisition of Topline. It's a popular brand in pipes and fittings in Eastern India. Along with Crestia's 4 other group companies, the total deal consideration is 265 crores. That's the enterprise value on a debt-free, cash-free basis. The total estimated turnover of the group of companies that we are acquiring is about rupees 330 crores in FY24, with an estimated adjusted EBITDA in the range of about 9 to 10%. We would also like to highlight that this acquisition will be PAT accretive. The acquisition is a significant step for us at HIL and in our commitment to further accelerate the fast-growing pipes and fittings business. In my calls with you, my recent results call with you, we have been speaking about how pipes and fittings will be a key growth lever for us in the years to come. And this step is in that direction. This particular acquisition and company comes with a complementary portfolio of products, technologies, and market footprint, and will help us to significantly scale HIL's production capacity to 3 times the current and will straight away double our revenue in this category. So this acquisition perfectly aligns with the ambition and is part of a well-thought-out growth strategy for pipes and fittings. The combined synergies of the 2 organizations will broaden our product portfolio. Our product offerings and SKUs will double from where we stood before this acquisition. Manufacturing capacity and market reach. Overall, our ambition is to be at least 5 times our current size in this category over the next 3 years. The acquisition also offers immense growth potential. As I said, it not only doubles our revenue but also enhances our production capacity threefold, which means there is more headroom for growth, especially in the strategically important Eastern region. We also gain access to Topline's significant channel presence across 15 states. East, of course, is a stronghold for them. The company has built over the last few years significant government-oriented business. I'll talk about it in a second. Let me first talk about the product synergies that we get. So this acquisition will enable our entry into large segments such as HDPE, high density polyethylene, MDPE, and water tanks. These are segments where we were not present in the past. These are large segments in the market. And we now have a meaningful play in those. As I said, we will double our SKU offerings. It also creates access to patented technologies in water tank and electrofusion fittings, which will position us amongst a handful of players in the country with access to that technology. It also enhances our presence in government projects. You would recall, so far we have not played in the government segment. Topline, on the other hand, is specified and approved to supply products in 12 states to various government departments, including the Jal Jeevan Mission, the Natural Gas Grid, and PM Ujjwala scheme. This means, if we step back, that we will now be able to play in segments like agriculture, telecom, and natural gas, where either our presence was small or not at all. For this transaction, we'll be paying rupees 125 crores. So, as I said, the total enterprise value is 265 crores, of which 125 crores is equity, the rest is debt. So, for this transaction, we'll be paying rupees 125 crores to existing shareholders for purchase of 100% of equity shares, and additionally infuse 35 crores, so an aggregate of 160 crores to repay unsecured loans. The rest of the 110 crores will be the bank loans that we will give over in the entities that we are assuming control of. This 160 crores of infusion at HIL's level will be funded through a combination of internal accruals and borrowings, and we expect that this acquisition and all its related formalities will close in the next 4 to 6 weeks' time. Those were the highlights of this deal and why we feel excited about it. Let me pause here and open it up for questions. Thank you so much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Praveen Sahai from PL India. Please go ahead.
Thank you, sir, for taking my question, and congratulations on this acquisition. The first question is, sir, in this acquisition, there are 5 entities, and is there any intercompany transactions as well? Because if I look at the revenue for each and every company, it's not, the consolidated revenue is not equal to that. So is that intercompany transactions also there?
There are some. Let me invite my colleague Ajay, who's the CFO, to answer that question. Yeah.
Hi, Praveen. Good afternoon. So, out of 5 entities, the manufacturing is done in 4 entities, whereas 1 entity is mainly handling the product and then supplying to the customers. So, 1 is a trading company, and the 4 are mostly manufacturing companies.
Okay. Which one is the trading company?
Topline Industries is the trading company.
Okay. Got it, sir.
And the second question is, sir, on the numbers only, because in the press, that's one of the acquisition detail document. If I look at the numbers mentioned in the first, the serial number, that is a 265 odd crore as of 31st December 23. So is that a calendar year 23? That number is 265 odd crore? Because if I look at it, down in the same document, for calendar year 23, I can see consolidated number is around 221 crore for a total number.
So Praveen, this 265 crore is basically 9 months unaudited number. 221 crore is 12 years FY 26 full year audited number.
Okay. Calendar year 23 is 221 crore, 9 months.
Praveen, financial year 23, that is April 22 to March 23 number is 221 crore, which is audited number. From April 23 to December 23, unaudited number is 265 crore. This is 9.
Okay. Got it, sir. Got it. Thank you for this clarification. And over the business, if I look at these companies are manufacturing the SDP, PVC piping, tank, containers, fittings, everything. So can you give some more color? Is like a large portion of the business is coming from where? Like it's more on the SDP or PVC piping. How is the business is actually placed in? And secondly is where we are actually, these companies are selling. It's more on the project, Chandigarh mission projects or in the region as well?
Sure. So, broadly speaking, the HDP, LDP portfolio is to the tune of about 60 to 65% for them. The tank business accounts for about 15% of their revenue. The PVC, so UPVC, CPVC accounts for another 20% of the portfolio. If you look at a split by the type of channel, the government channels account for about 40 to 45%. The B2C retail channels account for the remaining 50 to 55%.
Okay, that's helpful, sir. And also, if you can color on the geographical system, largely in the eastern geography, they are positioned themselves or sales is happening from outside as well?
They are selling products through the trade channel in 15 states, have a very good distributor dealer network in these states. The center of gravity of their sales are in the eastern part, so Bihar, Jharkhand, West Bengal, and neighboring states is of course their stronghold. Eastern UP also.
Okay. And also if you give some color on, because already you have given a EBITDA margin of 9 to 10%, how has been the trajectory? Is it a steady state margin for the company or is that something to look at improved or something like that?
So as far as the standalone operations pre-acquisition are concerned, they've been consistently on that trajectory. We expect as the merger happens and synergies start kicking in, both there will be benefits on the P&L of both our Birla HIL brands of pipe and also on Topline.
Thank you, sir. Thank you for all the information. All the best.
Thank you, Praveen.
Thank you. We'll take the next question from the line of Krisha Kansara from Molecule Ventures PMS. Please go ahead.
Hello.
Yes, ma'am, please proceed.
Yeah. My first question is on the capacity. So post this acquisition, what would be our consolidated capacity in this pipe segment?
We will cross the 100,000 mark, so we will be closer to 110, 115,000 metric tons per annum, which from where we stand today is nearly 3 times as large. But the other interesting bit about the capacity piece is you are aware that so far we at Birla HIL had capacities in north at our Faridabad plant, in west at our Golan plant outside Surat, and in south outside Hyderabad in Dimapur. East was a missing element. With this acquisition, that gap gets closed. Our ability to serve the fast-growing markets of East and Northeast grows many-fold with this acquisition. So it's not just the number and the capacity that we have, but now sort of closing all the gaps in the manufacturing footprint as well. What I'll also highlight is, apart from what the current stated capacity is, there is a fair headroom for growing this capacity at the existing facilities as well.
Okay. And sir, one question regarding this only. So how are we planning to position the Topline brand along with our own brand? So if you can just throw some light on that part.
So over the next, of course, Topline will now become a brand within the HIL portfolio. We've managed a house of brands for a very long time across our various product categories. Within pipes, we've been selling our pipes under Birla HIL. Topline will be an additional brand in this portfolio. For the short run of the next 2 to 3 years, we will keep this as a separate brand, grow it to its full potential. Of course, the brand will be endorsed by the Birla HIL association, but it will retain its unique identity. And the rationale for that is that the brand is fairly well known in the eastern markets. There is a good recall, there is a good channel connect, and there is a good customer connect. We want to take it to its full potential over the next 2-3 years, and that headroom for growth is fairly significant in our assessment.
Okay. Okay. And so one last question. So, you had given a sales guidance of close to 1,600 crores for this segment by FY 26 or 27. So, I have two questions regarding this. So, was this guidance given considering this acquisition? Is number one, and number two, do we plan to opt for inorganic growth in this segment even going forward?
The guidance is the goalpost that we are aiming. In fact, what we are sharing and we have shared in the run-up is that guidance will only go north of the number that you are talking about. These are ways of getting to that ambition. These are not, you can't be sure of them till they are completed in all respects. So, I would keep the two conversations separate. If your question is, are we still on track for that 1,600 and beyond? The answer is yes, and with greater conviction. Will this help in that journey? 100% it will. Will it accelerate that journey? 100% it will. Will we be on the lookout for more such smart acquisitions? Absolutely. So our march towards what we think is a rightful size in the market will come from a combination of a lot of work on the organic side, but also sensible inorganic moves like this one and like the ones we've done in the past.
Okay. Thank you.
Thank you, Krisha.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference, kindly limit your questions to 1 or 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Kush Gangar from PIPMS. Please go ahead.
Hi. So what would be the capacity utilization for this plant, and what is capacity utilization at our HIL standalone capacity?
Sorry, first of all, my apologies. I missed your name.
Kush Gangar.
Hi, Kush. So the capacity utilization at our current capacities are in the range of about 70%. So this is the Birla HIL operations. At the acquired entity, these are in the range of about 40 to 50%.
Okay. And acquisition seems to be quite reasonable in terms of price to sales, considering 9 to 10% EBITDA margin. What was the reason for the existing promoters to sell out?
I think it's a question which is best answered by the existing sellers than us.
So was it
In hypothesize, you are aware that in a business like this, there are sort of tiers. As you move from one tier of growth to another, there is a significant demand of capital for investment in capacity, for investment in working capital, for investment in channels. The founders have built a solid platform which has a runway up to what we believe at least 1,000 crores. But the investments that are needed, somewhere a company like HIL in partnership with this brand can actually make it on a more accelerated track. So that is what that at least our hypothesis, but the exact answer I think the sellers will get you.
so the existing promoters would continue with us, or
No, so they would not. It's a 100% acquisition. So the operating team and the management team will continue, but the promoters will transition out.
and you mentioned you want to take this business to 5x of the current size. Current size would be around 300 crores for our pipes business.
At our pipes business, we are in the zone this year. We should be in the zone of 350 to 400 crores without this acquisition. With this acquisition, we will already be 700 crores plus. Like our existing piece, at least 5 times is the aspiration. I think Trisha had also asked some number on what the goalpost is. As we are going along, somewhere we are also being ambitious on that goalpost.
Sure. And in terms of market synergies, if you can help us in a bit detail, and our aspirational target margins at our higher revenue figure, what can be the margins at that level, and some synergy details.
See, for the combined entity, I can talk because soon there'll be no advantage in talking about these standalone entities. For the combined entity, as I have shared in the previous calls as well, for this segment, we are aiming to be in the teens, so double digits, 12 to 14% is the first milestone that operating margins that we need to hit. There will be a journey and a path to it because we also anticipate in the short run there will be investments for us to scale up. So for us, the path will be first scale up and then the margins will also start showing up. Because you know in this business, scale has a significant impact on the margin structure as well. But in the short run also, this particular acquisition gives us some great synergies. First and foremost, the scale, as I said, doubles up. That advantage will show up. Second, today, for Birla HIL, nearly 20-25% of our sales are happening in East India. They were being served from our plants in North and in South. Immediately, with this footprint coming in, there will be advantages on the logistic cost. There will be advantages on sourcing the raw material. There will be advantages on the people front, given the team and the synergies there. So we expect that impact to start becoming visible in the short run itself. But overall, for this segment, the real picture will take a couple of years to emerge, because in the short run, we will be investing heavily to grow scale, grow counter share, grow market share. Our first milestone in that time period will be the numbers that I shared in the zone of 12 to 14% at an operating margin level.
Got it. Thank you so much.
Thank you.
Thank you. A reminder to all the participants to kindly limit your questions to 2 per participant, and you may rejoin the queue for follow-up questions. Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon, again. Thank you for the opportunity. So quick
Good afternoon.
with respect to Eastern market, what is the size of this market according to you, how it is growing? And B, we've seen a lot of new capacities being set up by the leading players. So how do you look at the competitive intensity particularly for the Eastern market?
So overall, these numbers will be up for debate. In a market, overall market size of about 40,000 crores as far as 45,000 crores as far as pipes and fittings is concerned. We understand that the whole East and Northeast cluster will easily be 25 to 30% of that. The overall all India market in the last few years and is expected to grow at about 9 to 10%. East will be an outperformer as far as that growth rate is concerned. So I would expect low double digits there, so 12 to 13% type of growth is what is expected. And the interesting bit is in East, it's not just, there is a fair amount of government related activity that is also driving investments in this. So it's both a combination of B2C projects happening and the residential demand. And that is why this market is interesting. There are also other things. If you look at, in recent quarters, you would have seen there is renewed interest as far as East market is concerned. There are our bigger cousins who are setting up capacities or have announced capacities. Why we feel excited about this is somewhere it helps us leapfrog. An organic development of a platform of this size is time consuming. Somewhere it allows us to be ahead of the curve as far as addressing the East market is concerned.
Understood. This East and Northeast you mentioned, did I hear the number 25-30%?
Of an aggregate overall India market. These are broad estimates, huh?
Okay. The second question I had, with respect to, are there many more such players who are in that 200-300 crore revenue bracket, which could come up for, as potential targets, or you think that's very rare? It's more of large players now.
Until as we look at these potential partners, acquisitions, mergers, the filter for us is less on size but more on what this portfolio brings to us and how good the strategic fit is. So when we scout for these opportunities, the net is cast wider. We will look at something which could be 100 crores to much in excess of the 350 crores that we are talking about. So, but the important thing is how does it fit into our portfolio and what's the value at which we are able to acquire. So I'll focus more on that than on the specific current size of these assets.
Fair point. I was just curious to know from your perspective, are there players? One is obviously whether it fits the requirements that you have, but in terms of the availability, are there many more such players, around, or this is far less?
Not many. I think if you look at, so if from an industry structure point of view, sub 150 crores or sub 150 crores, you will have quite a few players, sub scale and so on. But as you start going north of that, it starts becoming a rarefied field. As we are now hitting closer to the 1,000 crore mark, you will have a handful of players in that zone. So it is the options in that price will become fewer.
Understood. And just one quick clarification with respect to the competitive scenario, particularly in the Eastern market. Have you seen intensity going up of late, or things are as they were, and probably that will intensify over the next couple of years as those capacities come up?
So where we stand today, it is possibly the competitive intensity is on the lesser side. However, it is intensifying, and if I fast forward to the next 3 to 4 year picture, you will expect fairly heated competition in this geography. The way we are seeing this opportunity, I'm sure everyone else have their analysts working on it, and that raises their interest about that market. So my expectation is that competitive intensity will increase from current levels. But standing where we are, maybe there is a window for the next 2-3 years where it is relatively better compared to other regions.
Understood. This is very, very helpful. Thank you, and wish you all the best.
Thank you so much, Atul.
Thank you. The next question is from the line of Kush Gosrani from InCred. Please go ahead.
Yeah, hi, sir. Sir, could you give us what is the mix between agri pipes and non-agri pipes in the top line and even for HIL?
So at HIL, this will comprise today, you are aware, we are very heavily focused on CPVC, and that's been one salient feature of our portfolio. We are amongst the very few players who have consistently been 40% plus. And as a result, agri we have been very less indexed on that. It's about 10% or so of our portfolio that agri will comprise. In Topline's portfolio, it's a number allow us to come back on that. It's not a number that I recall immediately.
Okay, sure. And sir, overall, what is the mix between pipes and fittings at Topline?
Overall, so the fitting bit will be at this moment about 20% in that range, 20-25%. What is interesting, and I have to highlight this, is the technology this company has on electrofusion fittings. I'm sure as observers of this industry, there have been some recent acquisitions and valuations for the electrofusion part of the portfolio. This acquisition gives us a unique capability to play in that segment. It's a niche segment. There are only a handful of players playing in that. It's a better margin product. So far, the investments in that capability were recent as far as Topline is concerned, and we expect to grow that part of the portfolio fairly aggressively. So it's a USP of the portfolio that we've acquired, and I wanted to highlight that.
And sir, if I look at the press release that you have given, there is some confusion on my part. The total revenue, if I look at Prestia, Topline, Aditya, China, and Aditya Industries, is coming to somewhere around 600 crores. So what is the structure over there at the one we have acquired?
Ajay, do you want to answer that?
Yeah. So, there is a intercompany sales happen because some of the companies are into manufacturing of pipes, some are into fitting. They bundle all the products and then supply to the customer. So these 9 months for each, that is from April 2023 to December 2023, the revenue is 265 crores.
Okay. Okay. Got it, sir. Got it. And this last question on the margin side, so you highlighted 12 to 14%. Is that right? Both the synergy.
So which one?
Both combined for HL and...
No. We are saying at the moment, the acquired entity is in the zone of 9 to 10%.
Okay.
As we mature in this business and as we grow scale in this business, that is the first milestone that we are aiming at.
Sure. Okay. So what is the HL earnings right now?
So this year we have done in the region of 7% plus.
Got it. Got it.
And to your question on agri, in the current portfolio, they are about 20% in agri.
Got it. Got it. Thank you so much, sir. I'll get that.
Thank you, Kush.
Thank you. We'll take the next question from the line of Nikhil Gada from Abacus PNC. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity and congratulations.
Hi, Nikhil. How are you?
Good, sir. Thanks. Sir, so just firstly, so with this capacity, with this 80 odd thousand and we may be around 30,000 plus, what is the maximum revenue that, with this combined capacity we can achieve? Or is it that the 1,600 crore number you are saying is sort of achievable with the capacity that we have in house?
Now, so for us to achieve 1,600, or if I'm talking about the 5x, which is roughly in the 2,000, north of 2,000 crores, we will of course need to invest more in capacity. The current capacity in the acquired asset can take it to the 1,000 crore mark standalone for that. Our current capacity can take us to about 500 to 600 crores. But
1,600 crores combined is possible with the capacity that we have now.
there are nuances to it. There will be some organic investment that will be required, and that will happen. What this does is the need for organic investment just immediately is pushed out. So if we had not acquired it and we were pressing only on the organic lever, we would have had to invest earlier. This gives us a little more flexibility in that planning.
Understood. And so just, in terms of this brand Topline, and as you mentioned, it's predominantly towards the government part of the business. Is it possible, or is there something of a strategy where you want to only restrict Topline to just the government part and focus on build Birla brand in TVC, CPVC and all the other areas, purely because you being a stronger player in the eastern part?
So one small correction, I don't think they are predominantly government oriented. As I said, 40% of their portfolio is to these government projects, which by the way are fairly, they are chunky, so there is a predictability that you get, and they are also at good margins. The whole brand play and how we will sort of use both the brands in the portfolio, I would request a little more time for that to play out in the market. You can imagine this is slightly competitive and sensitive information, so let it play out in the next few months.
Okay. But it's fair to say that the focus would be, at least on the retail side, or on the PVC, CPVC side to push Birla more with the capacity that we have in place. Like,
See, I think there are 2 or 3 aspects to the question that you are asking.
Yeah.
We as HIL, as we look to grow our pipes and fitting business, we recognize and acknowledge that we need to play in as wide a market as possible, because otherwise the addressable market remains narrow and the ability to grow there will be range bound. So to that extent, if we were not playing in the government segment, which accounts for anywhere in the zone of 30% of total market, then that's a new segment we have opened up through this. Similarly, there will be a few more segments from a product point of view. For instance, HED, MDP, we didn't have a presence. It opens up new addressable markets for us. So first is that strategy of increasing the addressable market. Second is then how do we grow the share in this wider addressable market that we are going after? That will require investment in brand, that will require investment in product and innovation. And more importantly, will also require investments in building a channel which is performing at an accepted level. So all of those things will happen. What I'm distinguishing is the aspect of increasing the addressable market and then second aspect of increasing the share in that addressable market. There was a third aspect to your question, which is how will the brand sector play? See, there's a way in which, while I will not answer this question, but I will lay out the facts as it stands before us today. There is a way in which the Birla HIL brand has been created. As I've shared in our previous calls, apart from a huge amount of trust that the Birla brand brings with it, it is heavily focused on the premium end of the market, where we are selling more of EPVC, we are focusing on higher realization. I had shared with you at about 160-162 rupees a kg, we would be amongst the top quartile of realizations in the industry. So there is a certain way that brand has been positioned and pitched in the market. There is a slightly different way in which the Topline brand has been built and developed over the last few years. We will want to marry the two and get benefit of or try and get the best of both worlds.
Understood. And just one last question, if you can share some balance sheet details as well in terms of what is the gross block and the working capital currently in the acquired company. And you mentioned that 100 crore odd. So this is a bank loan which is already there, right, in the company, or this is something they are going to raise?
Nikhil, the gross block is in the range of 150-155 crore, and the working capital requirement is working capital right now in the business is in the range of 25 crore.
Okay. And just the 100 crore, I didn't get clearly. So 260 crores, 160 is going to be for the equity and unsecured loans, and the remaining 100 crores would be for?
110 crore we are taking over the existing debts.
Okay. Okay, got it. Okay. Thank you so much. All the best.
Thank you.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Thank you for the opportunity, sir. Sir, I wanted to understand how the business been PAT positive for the past 3 years.
Hi, Madhur.
Yes.
So, Madhur, they are PAT positive in the year FY 21-22. FY 23, because of sharp fall in resin prices, they have shut down their operations, PVC operations, particularly for 6 months of the year. So they were PAT negative in last financial year.
Okay. Sir, my understanding was from this was the government business is very working capital, it puts strain on your working capital because we have seen in the industry like JN irrigation where this suffered significant losses from the government business. So I wanted to understand how are you planning to tackle this problem for the government part of your business?
The question on losses or is the question on working capital?
So the losses were mainly is regarding the working capital as well as losses in the government business of some of the industry players. So I wanted to get your sense on that perspective.
And I'm talking on the evidence of this company. Let me not broaden it. They have had a balanced portfolio where at 40% of government, they have returned profits consistently. So there is no concern around this segment being unprofitable. Point number one. Point number two, yes, it requires working capital investment. A lot of times to bid for these projects, you need a certain balance sheet strength, you need a certain credentials to win. And that is where we believe that with us being in the mix, our ability to bid for larger projects, our ability to win larger projects in Topline will grow significantly. So somewhere there is latent potential that is sitting there. With their balance sheet, their ability to borrow, they could only bid a certain size. Having said that, they are approved and specified in those trades and in those projects. But there were certain limitations which with us coming in, there will be almost an immediate alleviation around that and offers us some interesting growth opportunities.
Okay, sir. That was helpful. Thank you and all the best.
Thank you, Madhur.
Thank you. We'll take the next question from the line of Bharat Seth from Quest Investments. Please go ahead.
Hi, sir.
Hi, Bharat.
Congratulations on this acquisition.
Thank you.
Now, with this, we will become a pan-India player. Is that fair understanding?
We are already a pan-India player. As I said, we are serving all the markets, and as I said, East is already accounting for 20 to 25% of our sales. So as far as our go-to-market, our distributor partners and channel partners are concerned, we already have a pan-India footprint. What we did not have was manufacturing in East, which this acquisition helps us close that gap.
With this acquisition, what will be our market share in the East India, and what was how this when we were only distributing, so how this existing entity that we acquired was competing against us, and what was their market share at that point of time? And now, of course, their EBITDA margin, as you say, is little lower than our company. So what is the roadmap to grow that margin?
So small correction, they are at par slightly better compared to us as far as their operating margin is concerned, so they are no worse than us. As far as market share, the sector are concerned, I think the numbers are in front of you. At an all India level, we are small. I think there is no denying that fact. We would request you to judge us on how our market share will look like in 3 years' time. And that is the whole story that is playing out. We want to grow to a level that the market share first is respectable and second starts at least aiming for double digits.
You said also this acquired from entity has a electrofusion retail capability, which is really USP. So how much that product is really contributing where the margin is also high, and how do we really want to play out on that product on pan India?
So that's one of the exciting parts of the story. A lot of that electrofusion oriented capability and capacity was built in the last few months. They have started hitting the market. So if you ask me, the revenue contribution this year is small, very small, but it is growing month after month. We believe we can grow that business alone to about 75 to 100 crores in the short run. The margins in that part of the segment are usually double of what we see in the traditional pipes and fittings as an overall category. So it offers a great growth potential and a profitable growth potential. Of course, work has to be done to realize that potential. There are players like Bentley, etc., and there are transactions that have happened recently. So those are exciting stories that are playing out specifically only on electrofusion fittings.
And that is application of that you are fitting is in which kind of, work that, if you can, because we are unknown to all this, what you are talking, electrofusion fitting. So if you can give little more color, its application.
These are fittings that specifically go on the HDC side. They are technical in nature, so but largely go on the HDC part of the application.
Okay. And how much big is the market for that? And who else are there in this business?
So globally, and these guys have some presence in India as well. George Fisher is the market leader. Then I mentioned this company called Bentley, which puts me at the lower end of that spectrum, does about 120-125 crores of sales. So there are maybe a handful of players that play in that segment. There are a lot of people who may be trading and branding their own branding outsourced products, but core manufacturing and capability is only with a handful of players.
Okay, and all the best, sir. Thank you.
Thank you so much for your
Thank you. The next question is from the line of Nikhil Upadhyay from SIMPL. Please go ahead.
Yeah, hi. Good afternoon. Congrats on the acquisition.
Thank you so much, Nikhil.
Yeah. Just two questions, and I think this question was asked earlier also, but if you have to understand, see, they have a big, almost 40% from the government business. So if you have to understand their brand saliency in the eastern market, at the retail level, or can you share something on like what is their market share in the eastern market? And secondly, during the call, we also discussed that there are many sub 150 crore kind of players. And if you look at their sales ex of government, it's still around 160, 170. So are they a large retail player in a way, or there are multiple larger players and then something on the retail side in their market share?
So market share, again, if you do the math in terms of what is the market size and their own sort of revenue, they'll be in low single digits. Retail, but that said, they are a relevant player, at least in the eastern market. So if you look at the states of Bihar, Jharkhand, West Bengal, eastern UP, they have a good brand recall, and they have a good channel presence. As I said, about 50% of their revenue comes through that. But market share, as I said, would be at an all India or even at an eastern region level would be in the low single digits.
Okay. And at a retail level, if we compare our realization with their realization, what would be the kind of price difference?
See, it's not comparable because their portfolio is different. You remember I mentioned a lot of it is HDC, a lot of it is water tank. So it's not really the right comparison.
Okay. Okay. And lastly on synergy, so one thing which I understand is with this manufacturing, you release your capacity for north, west and south probably by 20-25%. But other than that, what kind of synergies can actually play out? Like, I'm unable to understand like broad pointers other than this capacity release. What kind of synergies are we thinking can play out here? Because distribution costs, because this is a more of a regional business with your capacities in there and your brand presence in there. So at manufacturing level, I don't know how the synergies will play out for us. If you can just spend some time or help us understand.
I think let me take it one by one. First at a top line level, I mentioned one area that they are playing. So first synergy is what are the new product segments that it allows us access and allows them access. You, as a follower of this industry, a lot of one metric that everyone follows is how many SKUs does a company have to offer to the market, and that immediately doubles up for us. That is a significant point of synergy. New products like HDP, MDP, for us, the depth of CDC, CPVC offering on our side is again a synergistic play. Then on the channels, elements like government as I laid out, the fact that it now comes under the HIL and the DK Birla portfolio, our ability to play at a larger canvas goes up. Our ability to win larger projects goes up. So there is a direct synergy there. And the depth that they have in Eastern market from a retail presence point of view is again a complement to our existing portfolio. We've been strong in North and West. East is something that we've grown in recent years and quarters. It immediately gives us a stronger foothold there. Again, a point of synergy. And there will be synergies on the cost side. It comes from freight, as you can appreciate. Even today, 20 to 25% of my sales happen in East, but I'm servicing it to my plants in South or in North. That gets addressed. There is potential benefit on the sourcing side. When you are sourcing the same raw material larger scale, there are benefits that you derive out of it. So there is procurement cost advantage. Teams come together and at a shop floor and operating level, there is exchange of best practices, there is exchange of efficiency and effectiveness metrics which allow us to be better versions of ourselves on both sides. I'm sure we will also have some learnings from them. So that's again a benefit that will start flowing. And possibly also on the headcount side. So there will be the usual suspects when it comes when two entities of similar size are coming together on the cost side, that those benefits should start flowing. Okay. Does that clarify what you were looking for, Nikhil?
Yeah, to some extent. See, what I was trying to understand is that on the product SKU side, I agree that the market increases, but now if you build something or manufacturing something in East and sell it in West, the reverse freight cost will again come into play for us. So, because largest cost was the freight cost, which impacts the industry. And
you will have to allow us see, the way it will happen at the moment. Let me give an easy example. Okay. We are not, today all their tank manufacturing is happening in Patna only. Now, with the technology that we acquired and with the capability we acquired, it is easy for us to also augment tank capacity in our existing plants in North, South and West, and we can start serving local markets from there. So the idea, and this is something that is a work that we have to do at our end, the idea is not that we keep moving things from Patna to the rest of the country and so on. But with this asset, our ability to optimize that goes up many folds.
Okay. Okay, and lastly, even though our realizations are higher, our margins have been lower. So, and this being a more government driven, like 40% government driven business, means spending being low. So if we understand for our minimum HL of marketing spend, where would be our margin profile be? Because you mentioned this time multiple times on corporate investing to build up spend. But can you give some sense that X of this marketing spend or pre-marketing spend, where are our margin profiles?
So it is a slightly bad line. I could not quite understand the question and the relation you are trying to derive between marketing spend and margin.
So what I was trying to understand is that you said our EBITDA margins on HIL standalone pipe business was around 6 to 7% this year.
7%.
Yeah. And they've also mentioned in a previous call, we are investing heavily in marketing to build the brand in the pipe side. So if we have to understand our pre-marketing margins, where that would be currently? Like, are they close to 9-10% or?
Correct. So at this moment, you can easily assume that what you are calling marketing, I will call it business build spend, will easily be to the tune of 250 to 300 basis points. That is where we stand today. That is likely to be the scale of investments over the next couple of years as well.
Okay, fine. Sure. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Chirag from White Pine Investments. Please go ahead.
Yeah, hi. Thanks for the opportunity.
Hi, Chirag.
Yeah, hi, how are you?
Good.
Congratulations for a good acquisition. So just first very basic clarification I want. You said working capital is 25 crores of the entity, right? I'm more interested in the receivables and inventory and any risk of any provisions that could come across, even if 60% is also B2C for them. That is the first question. So have you done your due diligence on that side or there,
Yeah, Chirag, we have done due diligence on that side, and we are only taking over receivables up to 90 days or inventories which are good in condition.
Okay, so that has been sorted out. Great. Okay, so that is one. Second is, just to understand, so be HIL brand in or the Topline brand, who are the actual competitors? Are these smaller players who are your main competitors? If you can just throw some light, both for Topline brand today, who are your key? I know everybody is a competitor in that sense, right from the biggies like Astras and Supremes to the smallest guys. But from your perspective, from today as well as from 2-3 years out, who are changing your competitors or from whom you are looking to build the business or gain market share?
See, it's an interesting and a difficult question, but maybe I'll take the liberty of saying who are the people who inspire us. And to that extent, they are the people that we track, follow, would want to emulate and would eventually want to beat. These would be the top 4-5 players in the industry, starting from an Astral right up to a Prince. There are good stories that they have started out over the last couple of decades. For us as a younger brand and as a challenger brand, those are the goalposts to keep in mind. Otherwise, you are right, every micro market has a different dynamic and the brands at play are different. Even for different product segments, there are differences that come into play. But when we look at what is the kind of model and scale that we would want to emulate, then these larger big brothers are the inspiration to follow.
So, and the second question was, when we talk a lot about margins, what is the thought process on return on capital employed or ROCE, if I can use? Because industry, again, if you look at the players, listed players, the ROCE profiling is all over the board. There are people who are in single digit to mid-teen, and there are people who are consistently upwards of 20%. For a business like ours, how are you looking at return on capital for this combined entity? And have you given a thought or it's still work in progress?
I think the thought is the following, and this is Chirag. I think we've been interacting for the last 1 year, and for everyone else on this call. The first and foremost objective is to build scale. So, while there are conversations in rightly so around margins and return on capital and so on, we believe the path to profitability comes through scale, and hence the single-minded number one focus is to win on counters, grow market share, grow the revenue profile. Having said that, the margins that I spoke about will lead us to return on capital, and at a minimum level, the threshold that we have even from a group et cetera perspective is to be nearer the 15 to 20% mark. Anything less than that over this period will not be in the direction that we are setting for ourselves. But there is, again, I'm highlighting, because we will keep interacting and we'll keep meeting hopefully every second month.
So, Fred, sorry, my question was, because 15% margin is a very high threshold, and I was worried would you be compromising growth for that. 15% margin is a reasonably high threshold.
I think 15%, we'll get to that level. Will we be there tomorrow? The answer is probably no.
Okay. But would it be fair to assume as an aspirational objective, 1,600 crores when you achieve that revenue or 62,000 crore revenue is where you would like to settle at that number? Is that the right way to look at it? Till that time it could be fluid.
Sorry, would you say that again, Chirag?
So your revenue aspiration of 1,600 crore to 2,000 kind of number that you indicated,
Yeah.
is the point where you are looking at 15% kind of margins. Till that time it can stay fluid and focus will be on the revenue.
I think the way I would answer that is, yes, a lot of these things, all of these things should start looking in the right zone when we start hitting the 2,000 crore number, but most of them should start looking in the right zone north of 1,500 crores.
Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thanks, Michelle. Thank you everyone for joining in. It's been a pleasure interacting with all of you over this call. Again, appreciate all of you joining at a short notice and joining us on what we feel is an important milestone for us at HIL. As I shared about a year ago when I took over this role, one of the big things, actually two things I spoke about. One was we will be pushing hard on the growth agenda. News like this should give all of you the confidence and conviction that we are staying true to that commitment. The second thing we said was we will grow the non-roofing, non-cementitious part of the business. With this acquisition, that part of the business will now become almost 25% of our portfolio and will inch towards the 1,000 crore mark. Both are significant milestones. So thank you for joining us on this important news. Please keep being interested in HIL, keep following us, keep sharing your inputs and thoughts. If there are any further questions or you would like to know more about this transaction or HIL in general, please reach out to our investor relations desk. Thank you so much, and good afternoon, everyone.
Thank you very much, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of HIL Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.